This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
TradeFlow Capital Management celebrates 5 years of strong returns and SME success. To find out more, please visit www.tradeflow.capital.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Output cuts announced by OPEC Plus producers risk exacerbating an oil supply deficit expected in the second half of the year and could hurt consumers and global economic recovery, the International Energy Agency, IEA, said on Friday. OPEC Plus and the IEA have jousted in recent months over their outlooks for global oil supply and demand. Consumer countries represented by the IEA have argued that tightening supplies drive up prices and could threaten a recession, while OPEC Plus blames Western monetary policy for market volatility and inflation which undercuts the value of its oil.
Oil exports from northern Iraq to the Turkish port of Ceyhan remain at a standstill almost 3 weeks after an arbitration case ruled Ankara owed Baghdad compensation for unauthorized exports. The March 23 arbitration ruling by the International Chamber of Commerce, ICC, ordered Turkey to pay Baghdad damages of $1.5 billion for unauthorized exports by the Kurdistan Regional Government, KRG, between 2014 and 2018. In response, Turkey halted the flows of 450,000 barrels per day. It wants to negotiate the payment and resolve a second arbitration case regarding unauthorized flows since 2018 before it restarts them, according to sources.
Moving on to the top news in the energy sector.
Middle East spot crude prices are climbing on expectations of tighter supplies ahead of peak fuel demand in the northern summer, squeezing Asian refiners' margins and prompting them to secure supplies from other regions, traders and analysts said. Middle Eastern crude benchmarks Oman, Dubai and Murban have recovered in April back to early March levels after the OPEC Plus caught the market off guard by announcing further output cuts from May to the rest of the year. State oil giant Saudi Aramco also unexpectedly raised official selling prices, OSPs, in May, making the bulk of Asia's term purchases more expensive even as it fully met Asian refiners' crude requirements.
Climate ministers from the Group of 7 countries are set to agree that ammonia could be used to cut emissions from fossil fuel-based power plants, but only under certain conditions, offering a cautious endorsement of G7 host Japan's climate plans. The latest draft statement for the meeting of G7 ministers on April 15 to 16 in Sapporo, Japan, said, some countries are exploring the use of low-carbon and renewable hydrogen and its derivatives in the power sector to work towards zero-emission thermal power generation. The draft, seen by Reuters, said this strategy must comply with numerous conditions. It must be aligned with reaching a largely decarbonized power sector by 2035, comply with limiting global warming to 1.5 C, and avoid emissions of nitrous oxide and other pollutants, the draft said. Next, we have the top news in metal markets. A Chinese company bought at least $7.4 million worth of copper alloy ingots from a plant in a Russian-annexed region of Ukraine that is subject to Western sanctions, according to Russian customs data reviewed by Reuters. China has not imposed any restrictions on trade with Russia, but the United States has threatened to blacklist companies round the world for violating its sanctions and warned Beijing against supplying Moscow with goods banned by U.S. export rules. The customs information, drawn from one commercial trade data provider and cross-checked with 2 others, shows some of the first evidence of Chinese trades with Russian-annexed regions of Ukraine since the war began on February 24, 2022.
The European Commission said on Friday it had prolonged anti-dumping tariffs on stainless steel fittings from China and Taiwan for 5 years and extended them to Malaysia. The Commission's review of the measures concluded that removal of the tariffs would have led to continued dumping in an European Union market worth some €100 million, $111 million per year. The measures, in place since 2017 on stainless steel tubes and pipe fittings, were extended to Malaysia because the investigation found that Chinese producers were using assembly operations there to evade applicable tariffs.
We will now look at the top news in the agricultural sector.
UN Secretary-General Antonio Guterres has written to Russia, Ukraine and Turkey to raise concerns about the implementation of a deal that allows the safe wartime export of grain from several Ukrainian Black Sea ports, a UN spokesman said on Friday. The United Nations has said no ships were inspected on Tuesday under the deal, agreed in July last year, as the parties needed more time to reach an agreement on operational priorities. Inspections resumed on Wednesday. The Secretary-General has written letters to the parties and we are diligently working in close collaboration with Turkey to maintain the continuation of the vital agreement, UN spokesman Stefan Dujarric told reporters. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.